Hello traders, good morning. This is Yanis. Thank you for joining me for the forecast and the outlook of this last trading week of March 2022. And one word that I would like to say, and just as a reminder to all of you, perhaps this week, this trading week that's ahead of us, might be one of the toughest and the most difficult ones to find a clear direction and a clear bias. And the reason for that is not only the ongoing war between Ukraine and Russia, as you have seen, it has an impact on a daily basis on how the markets are moving, but also because it's the last week of the month, and at the same time that closes the first trimester, the first 3 months of 2022. So usually during this period of time, there's a lot of accounting that has been that is going on, balance sheets that need to be closed and balanced, and what's not. So anything really can happen this trading week, and this is why the forecast is extremely difficult actually to be made. And you will see, I will explain to you why as we will go through all the currencies that we are looking on a weekly basis. So additional caution is needed for this week, and you need to be alert. And as I'm always saying, you need to plan your trades. And then trade the plan that you have made. No matter if it does materialize or not, you need to be able to have everything planned up front. And as usual, do not chase the market, do not chase your trades. Let the market come to you, and let the trades pop up by themselves. So starting with the euro. The euro has continued this past week its downtrend, despite a small reaction last week after that morning star here. And price went up all the way through 1.11 ish. And then last week, the bears again took control. And now the euro dollar is flirting with a very interesting area, because it's around number area 110, okay, which is about here. And as you can see, that area has served many times as a support, but also as a resistance. And right now the euro is resting on the weekly below both moving averages, below the 20, actually quite far from the 20. And the 200 moving average here in red-orange. So dropping down to the daily time frame in an attempt to have a cleaner view of what could be going on this week, what do we see? We see that the market was in a range. The bulls tried to get control a couple of times here and here, but they couldn't manage to push through the 114 area. And as a result, the bears took control, and here price traded almost on a flat 20 moving average, despite the fact that obviously we are below the 200 on the daily, which is extremely important. So you saw that you see that there was some movement above and below the 20 moving average. All the boundaries that we have set around level numbers, the static support and resistance levels are still in play, and price is reacting in a very good way to those levels. So right now, what did we have? We have a push through the previous low around 111.50, and the bears tackled the 108 mark, which is extremely important as well. Price managed to get back up about 300 pips to the 111, and now seems to be respecting the 20 moving average, still holding though on that extremely important area, which is not only a round number, it's a psychological number, 110. So from that point, we don't really know what can or will happen. As you can see, despite the fact that we had the last 3 days closing with bearish candles, those candles were not very clean candles with big bodies. To the contrary, we did have some reactions from the week. So right now at that point, it seems like the euro is rejecting the 20 moving average again on the daily. So in that case, obviously, the next trade would be short with an immediate target of 108 again, which is that support, that resistance level on the downside, and that ascending trend line, which is extremely important. So everything would point to the fact that the euro will continue yet another week on the downside, to the downside. But like I said, we need to be cautious and we need to stay on our toes. Here on the 4-hour, as you can see, we also entered the range trend. So again, price is hovering above and below the 20 moving average, respecting the small boundaries created by the resistance and the support areas here at 111 and here at 110. And right now it would seem like we are ready to break 110 to the downside. So I'm expecting that resistance here to fall, and price should go further to the south and test the 10850, 108 area. So for me, that's the immediate trend to the downside. However, we do have a structure here on the 4-hour which could show a potential for the bulls to take control. And you know that I'm always looking for the market structure. And as you can see here, we are creating higher highs compared to the previous ones these past 2-3 weeks. And we are also creating higher lows, even if here the lows are not higher really, but they are at the same level. So we do have on the 4-hour a structure which could lead to an uptrend. So this is why for me it's extremely important to wait and see how price will react here at the opening of the market before committing into any of the directions. So if I had to choose, I would be probably going again for another short, but I have my reservations. So for me, eventually the short would be a close of a candle here. I would use that stop just above the previous high. And like I said, my target would be here. That's one scenario that I want to see. Okay, yeah, that doesn't necessarily mean that on a close here, that depends on the candlestick pattern that I will find. That depends on a few things. However, that would be the short play for me. In case that I do see a reaction here, which I'm expecting as well, and that would be a bullish engulfing candle and a close above the 20 moving average, in that case, I would be willing to go long. I would be willing to go long. I chose the wrong tool. I would be willing to go long on the break of this previous high here. Okay, and in that case, my target would be the 111.50 and probably the 200 moving average as it comes further down to meet price. It would start to get more horizontal before pointing up. The 200 is a very slow moving average in any case, and then I would be waiting to find and expecting the 20 to support that move to the uptrend. So meaning the candles would use the 20 as a support. That would be my long scenario. And like I said, the short scenario would be an entry here. My target would be here. And then my stop loss would be slightly above the previous high. Okay, so I'm on my toes with the euro dollar. I'm waiting to see how price will behave here at the beginning of the market before committing into any kind of trading at that moment. Moving further up to the pound dollar. Let's go and have a look at the bigger picture. Okay, the pound dollar, the same goes for the pound. Right now, without putting any kind of fibos, we are somewhere close. Here should be the 50% of the fibs from here to here. Actually, let me put them on the chart quickly. Okay, correct. You see here we are at the 50 mark here on that purple area, and then we would have the 61%, which is considerably lower. So allow me to remove the fibs. On the weekly, what do we see? We are obviously in a clean downtrend as well. But I have two remarks here, okay? We are at a very important crossroad because we are on the weekly flirting with the 200. And that's an extremely important indicator for that time frame, for the weekly. And what do we saw? We saw an attempt, a reaction at the 130, 1.30 mark here for the pound dollar. We did have a reaction from the bulls. However, they couldn't push through the previous week, that's 2 weeks ago, high here, and they couldn't break that very important resistance here to the upside. And last week we are closing with a doji slightly to the bottom of that candlestick pattern, and that does indicate that the bears can regain eventually control. However, again, we are above the 200 moving average. So dropping down to the daily time frame, let's try and see and figure out what the pair can or cannot do. Okay, we are clearly here rejecting, or not exactly rejecting, because so far it hasn't rejected it, okay? But we are testing still at that point. That was a rejection here, but we are still to the point that we are testing that area. And remember the areas, and this is why I'm using those colored areas, because we cannot really talk about a specific level. For example, we cannot talk about support or a resistance that is at 131.68. Okay, that can be further to the upside and to the downside, and this is why I'm using the word areas, and that's extremely important for you as well to understand that concept. Okay, so right now we are below the 20 moving average. That's a fact, and obviously we are also below the 200 moving average. So the immediate trend on the daily might be the short trend. However, with that reaction here last week, at the beginning of the week, we see that we managed to close above the previous highs here, above the 20 moving average, even if we are still flirting with it and we are right now below, but everything is not committed yet. And for me, that can be again a dual scenario play. Dropping down to the 4-hour time frame, we will see more clearly what I'm talking about. So we are again here, just like in the euro, we are on the 4-hour creating higher highs and higher lows. And because any change of the trend always happens in the lower time frames, this leads me to see and forecast a potential change of direction to the upside, despite the fact that we are below the 20 moving average, but we are still fighting that resistance at around 132. And as you can see, we are making higher highs and higher lows still at that point compared to the previous high and lows. So for me, on the 4-hour, that is more bullish than bearish, than the bigger picture. And because all the changes do happen on the smaller time frames, I'm also, like the euro, very cautious here on the downside of the continuation of the mood of that pair to the downside. So keep your eyes open and keep all the facts as we are showing you. Sorry. And be ready for any kind of scenario right now. So while on the higher time frames, we are looking at a very bearish scenario, yet on the 4-hour, things are not quite the same. So I would be waiting for a close below those candles, looking for a break and the close below here, which would validate the short. And in that case, obviously, the entry would be somewhere around the 131 mark, somewhere here. Still fighting that support on its way down before, and if all that breaks, then obviously we will be looking at 129. First of all, it will retest the 130 and then at 129. So the bearish scenario is not removed from the gameplay, but I'm also having my mind, despite the fact that just like the euro, my personal bias would be short. I will also be very responsive to the continuation here on the 4-hour time frame to the upside, despite the fact that there are a lot of walls to be broken. That resistance to start with at 132, then obviously the close above the 20 moving average, then the test of the 200 and the 133.50, 133 level, very difficult also to break, because this would be the previous lows here. So anything can happen and price can easily rebound to the downside, okay, and then moving further down. So we are, like I said, in a crossroad, and that needs a lot of attention, and that's what makes the forecast pretty difficult for upcoming trading week. So my personal bias would be short on that one. Again, my entries are not necessarily where I'm placing those marks on the chart, okay? But for me, that would be, if the short scenario do materialize, then that would be my stop. And in that case, for me, my target would be, the first target would be the previous lows here around 130, and the next target, which would be my final target. If that scenario materializes to the downside, then I'm pretty much very confident, let's say, that we will see 129, 129.00 coming in place somewhere here. So that would be my guess and my first bias for the dollar, for the pound dollar. But I'm also, and I will be looking for that as well, I would be looking for a long somewhere here with the target. Now that can make things more difficult if my entry is here. I'm not sure I would be risking to go that close as a stop. If I do that, then obviously I will have a small trade here with a smaller ratio. However, I would be willing, if indeed the long scenario materializes and we do have a move to the upside that can be sustained, then in that case, that would be my target, and my stop for that scenario would be somewhere here, below 131 anyway. Okay, so below those lows here. That would be for me the long trade scenario. We are moving now to the dollar Swiss. The dollar Swiss, the dollar seemed to be losing steam on the smaller time frame, but let's start with the bigger picture. And the bigger picture for the dollar Swiss is two very nasty weeks, especially the week before the last one, where we had that identified that pin bar, that topping tail, and the double top. Those of you who were with us for last week presentation would remember that comment. So we were extremely bearish on that currency pair for upcoming week, and despite the fact that it did push up further to retest the 0.94, the 0.9350 resistance, you see that the bulls couldn't manage to keep price above the descending trend line, above that area of resistance. So things are pointing down right now, but there's a but here. On the weekly time frame, we are still having higher lows that are created. Okay, we failed the higher highs here, and this is why the pair is in that range, confined. But we need to keep in mind that we are not creating, price is not creating lower lows, which would validate a long-term short direction. So if we drop down to the daily time frame, what do we see? What do we have? Okay, we see that there was that rejection with that evening star here pattern, price pushed through, broke the previous resistance to the downside, and now seems to be finding support on that area around 0.93, 9250. And as you can see, last week closed with a very interesting doji, a very interesting bottoming tail, a pin bar to the upside, kind of finding its support here on that area and on the 20 moving average. So despite the fact that the bulls took control for the past couple of weeks, we may be in a phase where price may rebound here easily and then push further up. And as you can see here, even on the 4-hour structure, we are making higher highs compared to the previous ones, and 1, 2, 3, 4, okay, and we are also making higher lows, 1, 2, 3, and that might be the fourth one. So right now we are on the daily in an ascending structure for that market, for that pair, and again here all the scenarios can materialize. Okay, the daily shows a strong resistance and a strong support, which would lead the pair to the upside, going further up. But if we drop down now to the 4-hour time frame, what do we see? We are in a downtrend. Let's measure that out. We should be very close to a very nice fib number right now, which is sorry for that, which is the 61% level. And as you can see, price found a very nice support on the 4-hour time frame, both on the 200 moving average, which also coincide with the 0618 level of the Fibo retracement for that up leg move. So for me right now, despite that doji candle to the downside, again, my preferred scenario would be long. I would be willing on a close above here to go long, in which case my target will be the 0.94 area, somewhere here, and my stop loss obviously would be either here, but I'd rather place them slightly further away, even if that's not making my ratio, my risk to reward ratio better, but that does give me an added insurance in case that I may have a week on candles. So that would be my first scenario. Probably, as you know by now, I'm always waiting for price to close above, coming back down to retest the 20 before committing to the upside. Okay, and then obviously the scenario to the short side would be a break of that. The 200 has already been tested, so in the way down it should be just passed through like butter. I'm not expecting it to be able to resist once more. And in that case, my entry short would be somewhere here. My target would be the 0.92 area, which also coincide with that ascending trend line. And in that case, my stop loss would be above the 20 moving average, somewhere here. Okay, so that would be my play for the dollar Swiss. Again, as a reminder, it's extremely difficult. It's the end of the month. It's the end of the first 3 months of the week. There might be some weird moves, and I'm also expecting some volatility for a lot of reasons. So that makes the forecast extremely difficult for upcoming trading week. But those would be my two scenarios for the dollar Swiss. Now getting back to the higher time frame, the weekly, and switching to the dollar yen. The dollar yen has been an amazing mover last few weeks. From the moment after that week, which closed not only above all the previous highs, it took out all those candles, but it also closed above the very important 117 mark. Okay, somewhere here. Yeah. And then what do we saw? What did we see? We had 2 weeks back to back with ferocious push to the upside by the bulls. And if we drop down to the daily time frame, you will see that there was no way back from the moment price gathered so much strength and pushed about 700 pips. I think that should be 700 and something from here to here. Yeah, almost 800 pips actually. So that was a very impressive move. It was easy to play, but only if you were on smaller time frames, because you didn't have many opportunities to ride that move. One obviously was here. That was an excellent entry for me last week. And some traders added more here at the break. And then last week, sorry, 2 weeks ago. And then last week, we had that small retracement, just as much as needed to the previous support area, then a push up, price gathered strength here to push further up. So we are looking at the same scenario for upcoming trading week. We may have that reaction, a continuation of the reaction that we had here on the 20 and on that support level. However, I was kind of hoping and looking for the bulls to be able to close the week above that previous high. So far we are below and we are above both the 20 and the very important 121.50 area. So that image here that I'm looking at from the dollar's yen is also depending on the previous pairs that we saw, and mostly the euro dollar and the pound dollar as well as the dollar Swiss. Why? Because that binary decision, either long or short, that we may be able to do is correlated with all those pairs in the same way. So if, for example, the long scenario as a reversal of the trend does materializes here on the euro, okay, like I said, if we go to the long scenario, because we are having higher highs and higher lows, then in that case, obviously that would mean that the dollar would be losing strength. And that will happen in the same way for the pound dollar, and that will happen in the same way for the dollar Swiss, where in that case, the short scenario will be favorized, as you can understand. Okay, so that's the same thing here for the dollar yen. So it will be either a dollar strength or a dollar weakness that will affect all the pairs that we have seen so far. Okay, so things are correlated and we need to be cautious about that. However, there might be some pairs that can move in an opposite way, but that correlation is certain and is present and is existing. So that one needs to be cautious of how things move all across the board, not only for a particular pair, okay? Because that will have an impact on the others. So here for the dollar yen, two scenarios as well. The first one might be a continuation to the upside immediately. In that case, obviously the target might be the next resistance area around 123, And in that case, for me, the stop should be somewhere here, not a very important trade as far as risk to reward ratio, but that can be scenario number one. Now, scenario number two, if indeed the dollar weakness shows across the board, then it will obviously show here as well. So we can have a reaction at the top or close to the top, the previous highs, before seeing price rejecting the 122.50, 123 levels, okay, anywhere here in that area, before changing its course now to the downside. And that would make sense because we have had on the higher time frames a move that's over 800 pips. Let me just take that again from here to here. Yeah, it's around 800 pips. And we didn't have one decent, even shallow retracement. That cannot be considered as a shallow retracement. It's just a small pause. Okay, so and we are extremely far away from both moving averages, the 200 here and the 20 here. So that red candle here on the daily, which is a bullish candle despite the fact that it's red, okay, might show some weakness, or could be the sign of the start for some weakness for the dollar. And in that case, I would be expecting price to continue that small reaction to the downside. Now, would it continue immediately from here, or would it continue after breaking up a bit higher? That's what I'm mostly expecting it to do. And in that case, my target to the downside would be 120.50, let's say the first one. Although if that move materializes, it will go way further to the downside. Okay, and but that would be the first target for me. And in that case, obviously, the stop loss would be somewhere here. Okay, and that gives me an excellent risk to reward ratio for both scenarios, but specifically for that short scenario. If price moves further up, hits that resistance wall, and then starts pushing further down. Okay, I would like to enter as high as possible, which is buy that short cheaper, okay, and then using my targets as designed, as planned here on the charts. So that would be for me the ideal scenario. I'm kind of in favor of the short. I'm definitely expecting a retracement. It's the fact that I don't know where it will happen, at what level, and when. So I'm on my toes for that short, that I'm in favor. However, I won't be surprised if price managed to push higher, especially at the beginning of the week, towards the 123.50, 123 mark. Okay, so that's the way I'm looking at the dollar yen. Now, let's move back to the weekly and have a look at the next pair, which is the Aussie dollar. Okay, here as well, what do we see on the weekly? We had 3, 4, 5, 6, about a couple of months, strong moves to the upside. Okay, they managed to take off those previous highs here. We closed obviously way above the 20 moving average, and price took a breath after hitting that important line here that I'm using now as a major resistance. And last week it broke above it, above the descending trend line, but couldn't manage to push higher to the 0.75 area here, 550. Okay, and we are still at that point looking at the previous highs. So we are in a kind of double top right now. And from the market structure point of view, we are not making higher highs. but we are making lower lows, okay? And despite the fact that we didn't have a lower high here, still they are at the same level, which could account for that as well. So basically, just like all the previous pairs, again, here we are at a crossroad, okay? On to the upside, there's that major resistance that has to be taken out at 0.7550. Obviously that would, if price can stay in a range, in which case it will also rebound and then start to retrace to the downside. Now, will it find support on that descending trend line before pushing further up, or on the 20 moving average, which seems to be pointing up right now, and even lower to the 200 moving average on the weekly time frame. But that's a big time frame, and from here to here there's a lot that can be done. So allow me to drop to the daily time frame to have a cleaner picture. Okay, as you can see, we did have some retracement here at the join of the two moving averages, the 20 and the 200, some ups and downs, and then price found support needed at the 0.7150-ish area, and that morning star here showed the way for the bulls to push higher up until the 0.75 20-30 mark to the upside. So now this is where we stand on the daily. Can the bulls push further up? Yes, definitely they can. I would be expecting for a reaction, and somewhere here that would be for me the best area to buy. As you can see here on the 4-hour, on the daily time frame, we are having a structure pointing to the north, which is higher highs and higher lows. Even if those ones were at the same level, we are making higher lows right now. So that could also be an indication that there's a continuation of that trend to the upside. Would it go directly through it and retest here, create a small rejection or a retest being above the 0.7550 area? Yes. Would it react right now as it is below? Yes, that can happen. Both things can happen. For me, if we drop to the 4-hour time frame, the trading time frame that we are using, what do we see? Actually, we are looking at that, and that's a very interesting reaction. And the reason why is because it's like the bulls are gathering strength. As you can see, we did have a push up. We closed above that high, which was extremely important. Then the bears reacted, and we had that small reaction here, but they couldn't pierce through the 20 moving average or break below those lows, and that was an excellent signal for anybody to re-enter that long move. And then as price hit that level, there wasn't a very important reaction here to the downside. And what do we see? We are looking at accumulation. Okay, so that's the reason why I'm kind of torn again. Would I be willing to short the pair? Yes, definitely yes, but I would be waiting for a close below the 20 moving average. It's not that far, and as long as the moving average is supporting that move to the uptrend, and as long as I'm looking at that accumulation phase here, which might be, you know, a small duration or a bigger duration, but I'm expecting candles to continue to gather here, to gather strength actually. And if that happens, then it's a very, very clear indication that the bulls will have much more power to the upside than whatever the bears might be willing to do. So here for me on the Aussie dollar, I would be willing to start long, assuming that again I'm having a break here and that can happen anywhere. So I'm just going to put that here and then use my areas as targets, and as for my stop here, I'd rather be with a slightly worse risk to reward ratio in that case, or I can use, you know, those lows here on the left, and eventually even those lows here if one wants to risk a bit more and stay closer to price, which is not a bad idea either. Okay, so if indeed this is an accumulation phase, then we won't see anything drastically going south, going to the downside, and we then should see a push with a very big engulfing candle to the upside. Okay, however, if everything fails here, and if the attempt to break the 0.7550 level fails, then I would be in the same way willing to trade that pair short. I would be then waiting for a close below the 20 moving average. Whenever that happens, might be somewhere here. Okay, in that case, obviously my stop would be here and my take profit will be at the 0.7350 area. So that would be the scenarios for the Aussie dollar. Okay, again, it's not very clean. I understand you're not happy, the traders are not very happy whenever we are not able to give them, you know, very precise directions. But it's not always the case, unfortunately, and we do trade in the same way. And that's what I like about that, and that's what I like personally about those presentations, is that I'm sharing my brains with you, and that's extremely important, because no matter if I'm right, if I'm wrong, if you agree or if you don't agree, remember, we can have 100 traders looking at the exact same chart, and you will have 35 traders telling you long, 35 traders telling you short, and another 30 traders telling you that we are in a sideways. So it's all a matter of how you perceive the market and the experience that you may have. However, whenever we do have a very clean direction, you know the presentations that we have done and the forecasts we have done so far, and we are always trying to give you just one choice when that's an evident choice. However, it's very nice and it's very good for you to learn how we forecast, how we foresee, and try to anticipate the moves for the currencies, for any financial market, for upcoming trading week, which is extremely important, because that feeds your mind, that feeds your mindset, and that prepares you to read your charts in a different way. Okay, so these are the two scenarios for the Aussie dollar. I will wait and see to see. I don't like to trade, you know, in the middle of nowhere, and I don't like to trade also very close to support and resistance areas, and that's what you should do as well. So I'm very glad when price is at those levels, because then I know that all I have to do is just wait for price to show me what the big guys, the banks, the big funds have in mind, and I'm waiting for price to show me the way, basically. Moving to the weekly time frame for the dollar CAD. The dollar CAD last week had a very, very bearish week, the past few weeks. And as I said, for the previous forecast for the Aussie dollar, the dollar CAD last week just had a single direction. Okay, when we closed the week last week, that was one of the pairs for which there were no two scenarios. Okay, we broke that resistance here, that support, let's say, to the upside, which now is a resistance to the upside, and I have told you so many times that 126.50 was a huge key level. And look what happened at the beginning of the week. We were allow me to remove that. We were here at the green line. Okay, and we did trade and retest last week that area, but now we did have a close below the previous lows, and that was a key level. So there was no doubt in my mind that the only trade was short, and that's what we did, okay, and that's what we suggested. And as you can see, very nicely, the pair reacted to the 21, 2, 3 times. It did reacted to that very important ascending trend line, which is here ages ago, for those who have watched all the presentations that we are doing. Okay, and we closed below again, small retest, nothing really alarming, and then the key areas were taken out. So here again, we are trading onto the downside, and we are also bearish for upcoming trading week. Again, it's a dollar CAD pair, so a dollar pair, okay, one of the majors. So what I have said so far for all the majors here, where the dollar is involved, stands for the dollar CAD as well. So allow me to get back to the weekly time frame to see the bigger picture. Okay, we have that break, like I said, of that ascending trend line, which was a key factor. Okay, we had the rejection of that level 3 times at least on the weekly, and now price is trading both below the ascending trend line and below that extreme level 125. So despite the fact that we didn't have higher highs, we are still looking at higher lows so far, and as long as we don't have a close below that low here, okay, which is very close to happen, yes, I get it, but we need to see some kind of closure below those lows to make sure that that ascending structure for that particular pair is broken, because we are still making higher lows. Okay, it seems that's what's going to happen. We have a very pronounced move to the downside. I don't like the fact that it's almost a one-way move on the daily. Okay, so I'm expecting some reactions here again. That would be healthy to have a retracement around the 126, 125.90, 125.80 areas, somewhere here, before pushing further down to the next target. So keep in mind that we are still, right now, we are precisely at that key level, very important level. And as the market opens, despite the fact that we are looking at a very bearish couple of weeks here, at least downtrend, anything can happen. So we can have a major reaction just because we are hitting again 1, 2, 3 times those lows. Okay, so price may reject them and have a slight move to the upside. Now, dropping to the 4-hour, what do we see? Clearly see that everything was breached as expected. Okay, so the natural move, if the bears continue to have the control, obviously for the dollar CAD, the natural move would be a move to the downside, which can start here, and obviously in that case the next target would be 123, I would say 50 actually, somewhere here. Okay, in that case, that's easy peasy. My stop would be above the previous highs from here, but mostly above the 20 moving average, which at that time should come back down further, or even eventually even above the highs and that ascending trend line. It's up to you. Okay, you know that I always trying to put my stops where they make sense and not where I can afford them. So that would make sense on the short side. Now, if we do have a reaction here, then the reaction will be almost immediate. The lows, the previous lows were somewhere here. Okay, and that would allow me, if I do see a bullish candle anywhere here, that would take out something of the previous candles, then that would allow me to have a very tight stop somewhere below those lows here. Okay, and then in that case my target would be here. So getting back to the normal size of the chart, that would be for me the short play, giving me a very good risk to reward ratio. No, 0.16. Sorry, it's around 2 again. Something is wrong with me this morning. It's not good. Okay, so we are looking at an uptrend scenario with an immediate entry. The stop would be somewhere here below those lows, and in that case my target would be that ascending trend line, and now I'm pretty much sure that my risk to reward ratio would look much better. Okay, so that would be my trade for the dollar CAD. Again, everything points down. That's a fact. But we still need to wait and see how things will evolve. Okay. Last and not least, obviously, the gold. Okay, gold is again has reacted here 2 weeks ago, 3 weeks ago actually, to the previous highs and to that very important level 220. Yeah, that was somewhere here, and now we have a pattern which is an evening star, which is a bearish pattern. We did have 2 weeks ago a very important push to the downside, where that area 1900, sorry, was tested. We did have a reaction off of it, and now last week closed in a very bullish mode. And that's extremely important because we managed to close above the 20 and above that 1950 mark, which is somewhere here. So everything points out to a long week for gold. That would be my forecast. I'm not looking at shorts anyway before the 1900, 1920 level is broken. We have those lines in place again for several weeks now, and as you can see, the price seems to be respecting them a lot. So I'm keeping them, and while we don't have any close below 1900, 1920, I'm not looking for short anyway. So I'm looking to buy all the gaps, all the valleys that gold will make on a smaller time frame. So dropping down to the 4 hour, the trading time frame for us, we see that we have that healthy retracement. I'm looking, however, that does look like a head and shoulders pattern. Actually, that's weird. I didn't notice it before. Yeah, it might be. That's the left shoulder, that's the head, and that's the right shoulder. However, we did have a close above the previous high, so even if that looks like a head and shoulders, I'm not sure that that's a valid pattern, or not sure that it will materialize either. So what do we see on the 4 hour? We had a nice support of the 200 moving average, of the 1920 level, which is an important key level for me. And then we had a push higher, managing to break and close above the previous highs. And right now we are looking at the same scenario. Seems like we do have price gathering strength to push further up. So for me, for gold, right now there's only one entry, which is to the long side, to the upside. And in that case, my entry will be here. My stops will be that's tougher. Probably here. I'm going to respect the 200, the 20 moving average, sorry, and use it also as a trading stop. That's a very good idea. And then the target, obviously, my first target will be to 2010. Okay, 2010 might go to 2020 as well, but I'm not greedy, you know. I'm just aiming here at the previous highs and the start of that 2000, let's say, ish area. So that still gives me over a 1.5 win to reward ratio for gold, which I think is good. Can price fall further down? Yes. In that case, you would wait for a close below the 20 moving average before negotiating the shorts. But for me, I won't be selling gold right now, no matter what it does, unless I see 1920 taken out. Okay, I'm not interested in shorting gold right now. So that's it for this week. Again, I took a bit more of your time. We are trying to make those presentations and those outlooks last around 30 to 40 minutes top. Now we are at 55. Thank you for those that had the courage to stay with me till the end. And I'm hoping to see you all next week for the next outlook. Thank you very much. Be cautious, be safe, and have an excellent trading week. Take care.